Good afternoon and welcome to FBN Charting Points, a technical look at ag markets. Today is November the 9th, and it was USDA WASDE report today, so we're going to heavily focus on what came out of that report today. First, let's read the disclaimer. Trading futures and options involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. The material is provided as is and for informational purposes only. It is not intended to be a substitute for specific financial, trading, legal, or tax advice. Neither Farmers Business Network nor any of its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the statements or any information contained in the material, and any liability is therefore expressly disclaimed. Past results are not necessarily indicative of future results. All right, first chart we're going to look at here today is U.S. soybean yield. Now, this is the first time this season or this crop year that the USDA has raised soybean yield. The market was not expecting a rise in soybean yield, but there was a 0.3 bushels per acre rise to 49.9. So it's a bit of a surprise to the market and added some pressure as very early on in the trading session, which continued to weigh down on the market throughout the rest of the trading day. So what does that mean? Soybean production is still not super high. It's now at 4.129 billion bushels. So it is going to mean that there still is a relatively tight carryout, and we're looking at 245 million bushels. As you can see, that's the smallest one in the last 5 years. So you may be asking, well, if the tightness in soybeans is that, if it's that tight, why did the market go down? Well, the market was expecting a print of 222 million. So there's a bit of a surprise to the upside on the ending stocks at 245. So what the USDA did was they increased the yield and the production, but they did not increase the demand at all to compensate for any of the extra. So all of the extra production that was accounted for in the USDA's adjustments was added to the ending stocks, hence the growth on there. That's a little bit different for corn, which we'll get into in a second, but we'll just continue here with some global soybean news here as well. USDA left Brazil's soybean production unchanged at 163. I don't think there was a big expectation for a big move in Brazil's soybean production for 2023, but what they did do was added 2 million tons to the 2022 number, bringing that up to 158 million. That's tons as well. So that kind of loosens up the Brazilian soybean S&D a little bit, and I don't think that that was expected in today's report. So we did see some negative sentiment on that as well. As far as globally, that brings last year's production up to a record of 372.2 million tons. This year, there's also an expectation for that to grow to 400 million tons, or 400.4. As you can see there, so one of the reasons why it's hard to rally the soybean market is because of this large production. And I know there are problems in Brazil and some other areas around the globe, but there still is some cushion here, about 8.2 million tons of cushion that would still make this 2023 crop a record producing year. So it is tough to make markets rally when production is increasing year over year. But we are likely going to see reductions going forward, particularly if the Brazilian weather situation continues to worsen. Although this week the rainfall was a little bit more supportive to growth. The rainfall forecasts were supportive to growth down there. But still, I think there's lots of room here for the 2023 number to fluctuate around a little bit, but there still is a pretty big cushion that would keep it still in record production territory. Here's what that chart looks like in soybeans. Again, I don't think there was a lot of damage done to this chart from a longer term perspective. Let me get my trusty pen marker out here. So, some things for directional change that we'd be looking for would be a break below this trend line here. That would have signaled further weakness. I mean, we are still seeing some pretty big losses here today, but we didn't break any major support. We did trade below this 100-day moving average. But you can see the 20-day and the 200-day crossed here recently. That's a bit of a bullish signal. And we are kind of making these higher lows and higher highs in this market as well. So all of those kind of things are positive. That's the higher highs there. are positive for this market. So it could have just been a setback in an otherwise uptrending market. So it could come back down and correct into this 13.25 area before we'd see a necessary pivot point. As you can see, there's like 3 major moving averages and then this trend line resistance that's down there. So there may be a bit of a magnet down to that level. What would be telling is what happens after it gets to that level, if it continues to break lower or if it bounces off that level and go higher. Right now, I'm kind of placing, we're well positioned. We're over 50% sold in this market, but for the next sale, we're kind of waiting to see if it can continue to trudge higher and make higher highs and lower or higher lows. All right, moving on to corn. Again, corn yield was increased to 174.9 bushels per acre. It was larger than the average expectation for what the market was looking for an increase, and that does bring production up to, or furthers the record in U.S. beans up to 15,234,000,000 bushels. So it is a record crop of corn in the United States. The one thing that did help this market out, this is the balance sheet, U.S. balance sheet pulled directly from the WASDE report today. You can see here that there was, 50 million bushels added to, 50 million bushels added to feed and residual. We had 25 million bushels added to ethanol and byproducts, and we also had 50 million bushels added to exports. So in total, use is up 125 million bushels versus the supply, which increased by 170 million bushels. So only 50 million bushels of that gets added to the ending stocks here. So it's not as bearish necessarily of a fundamental report as soybeans, because we're already dealing with a record U.S. crop. We're already dealing with high carryouts, and what this does signal is that the current pricing structure may actually be incentivizing some demand into all of these markets: feed, ethanol, exports, etc. So I would actually say that it wasn't, not that the USDA report was friendly to corn, but it did kind of just rebalance things a little bit, and kind of allows us to move forward. There were some further increases to the record production for global corn crop as well. So that sits now at 1.2 billion or 1.22 billion metric tons globally. Interestingly, there are some major exporters that added to their production. Russia increased, or there was an increase to Russia's corn production of 1.4 million tons. There was an increase to Ukraine's corn production at 1.5 million tons. And I think the market is kind of looking at this and saying, okay, the supply growth is not from China. The market tends to discount numbers when they increase in China. And that China was not the reason for this increase today. So again, this market traded lower as we went through the day. Here's the global supply. Just kind of wanted to note that as well. Production only tells part of the story, but ending stocks plus production is what makes up total supply. And we are staring at a global record of total corn supply. So it is going to be a tough year for corn. I think it will continue to drift lower. Our bias is for lower prices overall. We may have gotten a bit of a signal of that today as the market kind of moved below previous support here at 467. Trade a little bit lower than that. It did close just above that line at 468, but obviously the market is willing to take it lower. You can also see this 20-day and 50-day moving average cross, which is a bit of a short-term indicator on some bearish momentum building here. So this chart does look bearish. The report itself was skewed towards bearishness. The only saving grace really was the added demand, which could signal that we are in a pricing range where there is at least some demand coming to the table. Global wheat production actually moved down in this report. There was a couple of major areas, though, that happened. One of them was in Argentina, which we had kind of been expecting because of the drought. So they took 1.5 million tons out of Argentina. The other one, though, was India, where they took 2.95 million tons. Now, that's a big number. The problem with India, though, is that they don't really export much and they don't really import much. So that, 295 just basically got taken out of their carryout supply. So it doesn't really affect the rest of the world or the rest of the world's pricing structure. So the market didn't really look at that as being um, a, uh, a a bullish input to the market. What they probably were looking at though was the increase to the Russian production, which they added 5 million tons to Russia's production. Again, shouldn't have been a surprise to most people. Many private analysts or most private analysts were 90 or above in their estimates. The USDA does sometimes lag those private estimates, but those private estimates are climbing from 92, 93, 94. So this 90 million tons does make sense. It's the second largest crop on record there behind last year's, and you could make an argument that some of that tonnage is being calculated from some of the occupied territories of Ukraine. So, but overall, Russia's control of wheat has gone up. Here's what that looks like on the charts. I would call all of these wheat charts neutral. I didn't really see anything here that would give any kind of directional bias one way or the other. We do have a bit of a trend happening here in Chicago wheat higher. It did keep that trend moving. It did not make a new high here though in the last push higher. So again, that does signal, more neutrality. As you can see, the, lower highs and higher lows kind of starts to establish more of a pennant formation as opposed to a channel. So you kind of get this like pizza wedge thing going on. And eventually the market will break out, to one side or the other of that. Those are not very good to trade, particularly when there is a channel that was established before. So it just kind of looks like this market is neutral for the time being. Kansas is similar. It staved off, making a new low or anything as well. We're still, firmly in that channel, but we did kind of fail this trend line resistance. So that could mean that we're going to go back and test the 620 to 625 area in December. Kansas wheat. Minneapolis, much the same thing. As you can see, that upward momentum that we are seeing is still intact. Minneapolis wheat actually ended the day higher than the open, still lower than yesterday's close, but higher than the open today. Again, it kind of made, a lower high as well. So there is some risk here that this is still a technically trending lower market, even though we broke above some resistance here. I think there'll be some strong resistance in that 750 to 760 area where this trend line is right now, or that previous support level was from back in September. So overall, again, wheat markets to me look neutral, and the USDA report was relatively neutral for wheat as well. Touch on canola a little bit. Canola production grew by 600,000 tons. Similar to the wheat and the corn story, there were additions made in the European area, including Russia. So of that 600,000 tons, 500,000 of that came from Russia, with another 100,000 coming from Europe. So I think that what the USDA is telling us is that there's just a larger production bias overall for the Russian region, whether that you include Ukraine in that or not. But they had a good year of cropping there. So it does loosen up the canola global picture a little bit. I'll show you the canola chart in a second. Well, another interesting thing to note here is that Canada's production by the USDA is called at 17.8. StatsCan is still running with about a 17.4 million tons. So that may give us some indications as to what the amendment is going to look like when we come into the December Statistics Canada stock or production report. That lands on December the 4th. So December the 4th is when that happens, and we are expecting an increase in canola production. 17.8 might even be a little bit conservative on that front. Canola actually was one of the markets that closed relatively poorly today, close to its lows. This could signal that we're going to go back down and test this 670, 671 area. Definitely looks like that would be in the cards here in the next day or two as we move towards the weekend here. Whether it bounces on here or not will be important. I think if it does start to make a new low, that continues to kind of put a bearish bias on this market. So, just be careful out there. We're still kind of riding the fence at 50% marketed. I know there are many of that are less than that on their marketing plan. So, look at this market, and if that retest of 670 is something that you think would lose you some sleep, then maybe start looking at entering some floor pricing strategies, or taking some of that risk off the table. Okay, I'm going to leave you with Oats, because Oats knows, or whatever that saying is. Oats had another particularly terrible week, and sunk even further today, down into the low $3, or the lower third of $3 here. We're definitely probably going to come and test this 310 area from back in May. Now I think the magnet is probably going to be pretty strong to bring it down here. Again, I do think that this does put risk into the cash value. So if you are as well undersold versus what our recommendations are, which I think is also 50%, you might want to start looking at some cash options, because I do think that this is going to start leaking into the cash market. All right, that is all we have for you today. Thank you for joining us. Have a great day, and we will see you again next week, Tuesday.